Hello and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday 29th of May. There's a cautious look to markets today. There has been a bit of a risk reversal the past 24 hours or so. The S&P 500 fell into the close actually not far from the day low, and the futures have continued slightly lower today, and that has hit European markets, not massively, about 1% or so lower. The market moves have been coming through the anticipation of this speech by Donald Trump later today, where he's expected to announce measures that the US is going to be imposing against China for China's part in legislation and a security bill that it's imposing on Hong Kong, and the status that impacts on Hong Kong that has through its independence. So subsequently the US is going to be imposing some sort of sanctions on China probably, and then markets are sort of reacting negatively to that. And it'd be interesting to see how significant the sanctions are and how significant the profit taking is, because at the moment obviously they're just unwinding some of these upside break moves that they've seen in these equity markets and the risk rallies. But a little bit of a correction may not be the worst thing in the world, but it just depends on whether it gathers momentum and then starts to really fall away. But at the moment, we're seeing gold now trading back above 1720. That's an interesting technical implication there. We've seen the euro breaking out decisively above 110. It's now above 111 today. So really strong move that you're seeing on euro that continues. Dollar yen also gaining a little bit of traction finally after well over a week and a half of where dollar yen went nowhere. Dollar yen's starting to see a little bit of downside move. So there is this anti-dollar move that we've seen. Dollar index has broken below its range lows of 98.50, and actually at the low since early mid-March on that dollar index. Treasury yields slightly mixed still, little tick lower today, suggests the risk appetite negativity, but generally speaking, not a great deal of direction there on yields, but it certainly is the equity markets moving lower in anticipation of this move and announcement by Donald Trump today. Now, in terms of what we've got today, well, in terms of data, we've got the Eurozone inflation has just come out earlier this morning, and it's been basically in line with expectations. Core inflation slightly ahead of expectations, expected to drop to 0.8, actually stayed at 0.9, but other than that, HICP remains as is from last month. In terms of the core, on headline it dropped to 0.1%. I'll show you that chart where you've got, as I said, inflation falling on the headline, but just sort of steadying a little bit on the core. So nothing too significant there yet, but obviously the headline inflation has that oil price decline to factor in. Later today, we've got the core PCE for the US, which is expected to drop quite sharply to 1.1% from 1.7%, and also we're expected to see the final Michigan sentiment number, which is actually expected to slightly upward revise to 74.0 from 73.7, and that would be up from 71.8 back in April. So the May data continues to show signs of improvement broadly, and suggesting that April probably was a bit of a near to medium term low. Whether it is the low or not remains to be seen. So, onto my chart of the day, which is silver. Now, what we have seen is a really strong move on silver, massively outperforming, and actually on a basis of a rally from the March lows, it's up almost 40. I think it was 48%. I think it was as at yesterday, and a little bit higher from there today. It's a really strong rally, and considering equities sort of in the low 40s of the rally, silver is outperforming that equity market rebound. And it's forming this uptrend. It's sort of looking to position for a test and a breakout of this 1762 rally high, and that breakout would be well clear of the 76.4% fib level then of the big sell-off, and ultimately that would then reopen a full retracement to 1893, 1894 area. So we're looking for how silver can break out, following on from this uptrend. You've got strength through momentum indicators, stochastics in higher, RSI still strongly positioned. You'd be looking to buy into weakness. Look at the number of positive candles that you get. In the course of the past few weeks, you've only had 2 negative configured daily candles or intraday daily candles where the market is closed consistently above the open. So that suggests a strength in the bulls throughout the session and into the close, and seemingly sort of positioning again for that. So intraday weakness is a chance to buy on silver and pushing on higher, and looking for a test and a breakout of 1762 before moving on. Now obviously we've got some support levels to look out for. Certainly the initial one would be 1682, but in the last couple of days we've had 1714 as the sort of basis of support yesterday, and that's held and sort of pushing on higher from there. Positive configuration on hourly chart as well, so it's looking fairly decent now. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and you can watch top trading ideas through our Trader Talks videos here.